Hey traders, what's going on? So right now it's the weekend. It's about like 3 something a.m. right now. I'm doing my review of the week. It's the weekend of the market, so you spend this time to do your review and prep for the next week, update your analysis, all those type of things. So right now I'm going through it, and I wanted to share this with you guys because this is like it's a learning experience. I'm doing my review, and you guys can pull something from this as well. So basically, what I want to do is I'm going to just look at this. These is going to be like what happened last week, and then we're going to actually just hop into the charts, and then we can also just see like trades that were taken throughout the week, the whole analysis, the whole way the market was set up for the previous weeks with the EA and everything, taking the automatic trades. Okay, so looking at the important things here, we have the balance, which is about 29.10, and we'll look more into the equity and all of this later, but this is the starting balance, and then the current profit is -$7, and that is that I would call that about 71 to 80 pips worth on a 0.01. And this down here basically shows that we lost 0.24% of that, but we still managed to gain 25 pips. Took 42 trades, win rate was 23%. So that is, the win rate's pretty low in this case. Now I want to also show this, that the average win and the average loss, the average win to loss ratio is about, if my math is right, it's about 3.5 if anything. If this was 20, this should be 60. So I think this is around risk 1 to 3.5 on average. The next thing is that all these trades are taken at 0.01. I'm still testing it. I'm still just getting some ideas, seeing how to optimize it for better improvement and things just like that. And we'll actually look at that when we look at some of the charts, because some of them are they show that. So scrolling down here, it shows the active trades that we still have open. So this was my mess up. On Friday I was a little bit busy with a trading call, and I had totally forgotten about closing these trades that I was in. And realistically, that's just life. Sometimes that happens, and you have to just make sure that that type of stuff, when it happens to you, whether you're busy with whatever, that it doesn't damage your trading too much. Like, you still have to take a low risk profile, because you can't expect to be perfect at everything you do all the time. Okay, so just looking at this here, this starts to add up to a lot of things. So here we have what, 1 2 3 4 5 6 7 8 9 10. If my math is right, we have like 10 open positions right now. These are all winners. Currently this one is pretty low. This is what, like 0.2 pips maybe, but a total of 615 pips. So we gained 25 pips already, and we're gonna add 615 to it. And one thing that we can actually add to this, if this is the right thing, we can add the lot size. So we can show that all these trades that we're taking are 0.01, just for testing reasons. I'm not trying to, these should still be done live so you can get the experience, the emotional experience for what's happening, but also because it's testing, try to keep the damage as small as possible, and that's 0.01. So one thing to take note of here, so this is 29.10, and our current equity is at 29.65. So we're currently up. Let's see if my calculating skills is right. We do 29.10 plus 2%, so somewhere just around there. We're at $3 shy of this, but so it's just about under 2%, which is pretty good considering that we the total loss, or the risk we can say, is 0.24%. And just by doing some risk management, let's look at the win weight of that. So we can take 2 divided by 0.24 to get the actual win rate, which is about risk 1 to gain 8.3. And that would sum up once closing these trades, or if these trades would close at this exact moment. But once the market opens and I actually go through and I do my analysis, and I'll probably record it as long as I'm visually free while I'm doing the analysis. Other than that, we see how this adds up, 615 pips. If we did 0.01s, I would classify this as about a 71 or 72 to 80 pip loss. And the win rate is ridiculously low, but I want to add in, hopefully I'll be able to add in a bit later, the addition, the total sum, once these trades are able to be closed, of the win rate and everything like that, like the whole total. I'll try to add a snapshot in or something just like that. Let's just go over to the MT4 so we can see what's happening. So I probably won't get to show all of them, but basically the way this is weekly time frame. With this is the 4 hour, but from the weekly time frame, we can just visit. We formed a bearish candle last week. We're at a resistance, so I'm looking for those areas to try to take my sells in. We got no rejections in the first level, no rejection on the second level, so no entries were ever taken. When we were taking entries around this area, and that's why we're 20 pips on this move here. This one here, we ended up taking a trade, and you know, this one's just a really good setup. We pulled right back up to the support area, we pulled right back up to the resistance area, got a nice rejection and a nice follow through. Now here's a situation on Canadian JPY where we did get a rejection of the first level that we had in from this zone around here. Price rejected it, gave us the entry signal, and just went straight up. It provided no more entry signals to the downside while all this was happening, so we never ended up taking a trade on this. But there were other ex JPY pairs that did form a lot of good moves. Here we have Euro Australian. From the entry right around here, it's just been a bunch of consolidation. No rejection on the first meeting of this level, no rejection on the second, no rejection of the third either. Only when we popped up around here did we actually be able to trigger in to get an entry. We should have triggered into an entry around here this time, but this chart was not set up, so that's the time that we ended up doing our thing. And these ones really gave no rejection to the upside except for around here between this consolidation and lower time frame breakout to the upside. Only this area shows more strength, but then this would have just resulted in a loss, and we'll just have a quick look at that once we go back to the MyFX book. But this just goes straight to the downside and provides no more opportunities. This one we get a lot of consolidation, so there would have probably been maybe, I believe, 2 losses max on these position on losing weeks on pairs. This is one that performed really well. This was held from the start of last week around this rejection here, because I only got to put this in around Wednesday, Thursday. Like I only got to set up the EA Wednesday, Thursday, just so I can start testing. So we took our entry around here and we actually pulled up about 260 pips, 250 pips. And the stop loss, the trailing stop, got pulled right around this area. So, we ended up just getting out of the position. But we're in some other positions. We got a rejection around here, follow through to the downside before meeting more rejections of this support. There's just a whole lot going on when we actually take the time to trade all these different pairs, getting the help of the TPA-EA, the expert advisor. From this area here, we managed to pull up about 120 pips for some good structure along the way, just right around here as well. And the trailing stop got pulled around this level here as the structure started to change and it broke through the floor area. So we just got pulled out of that area and we collected, we'll have a look, but it just maybe just around 50 pips or so. And here we just have some others. This is a good example of how the trailing stop is working. Actually, here we have a rejection of this area. This is one thing that I don't like about the EA. Okay, this is something that needs to be optimized, and that is simply when this setup was actually formed, we interacted with the resistance area and we actually formed a bearish candle after that. This told the EA to enter a position. Now our entries here, but our stop loss is here. Okay, this is realistically not something that I want to go with, and something that I am just there to manage. Every 4 hours, once a signal is produced, if a signal is produced, I'm there to monitor the position just to see what's happening. Does anything need to be adjusting? It's a semi-automatic EA. That's what it does. Now, that's one thing that I don't like. The structure is, the candle and the structure and stuff are too large. The risk to reward is still there, don't get me wrong, but that's just not something that I would like to take less risk than that. And one thing as well is that the structure in this whole move already made a lower low, and that is just the one indication that I look for to say that the trend has at least continued and is therefore somewhat due for a pullback. Like a pullback is more likely after this point, because the trend has already done a continuing factor, which is make a new low. But yeah, from this point in time, we pulled back, we retested this area again, and we followed through with just a lot of pressure to the downside. Next week, I'm still looking to go bearish. There's nothing on this pair that looks to be bullish yet. If anything, I'm going to just put my areas just like this, around this area, significant area. We rejected this area previously. There was a hiccup there. Otherwise, this position is going to stay held until price actually pulls back and hits its stop loss, and we'll end up taking about 200 pips. This is a case here as well. We're using a trailing stop. We were stopped out a few times, about 2 trades on this one here, as we rejected this resistance once, twice, and 3 times for this week. And then we actually pulled back into another entry. We pulled back into another entry right here on this candle. It's not a bearish candle, but a lot of the pressure is below the 50% of the candle, so this triggers entry. This triggers an entry, and stop loss placed on the other side of the zone. And at this point in time, because we have occurred 75 pips, which we can see right there, we have our stop loss move to break even. Just stay safe. Now this one here, we did not get a rejection at the first level. We got a rejection at the second level, ended in a loss, and we got no more entry opportunities. When there's no entry opportunities, there's just nothing to do. Now you don't have to do this on all the pairs, just the pair that you want, but I'm me, so I do it on many pairs. Here we have this one here where we got a rejection of the first level, loss, resulting in a loss. And here we got the second level, a lot of consolidation around this area, but we ended up taking into an entry, and we have 53 pips covered, and we're up 126. So as we update this for next week, we're definitely going to be drawing in these levels. Okay, this one still kind of relevant. I would keep this in, as it's proving that it has some validity, and probably just adding this one in here for its bearish structure to continue. Even if we have a look at the daily time frame, look at that. The bearish structure has literally just come in and started at this point in time by forming a lower low, and the weekly bearish candle as well, and sensitive rejections to this 140 area, $1.40 area. So these are just things that I look for as I do my analysis. If we look at these other ones, we got a rejection here. We did get to cover on this one safely, I believe, due to the fact that a new higher high by the wick was made, and that is one of the criteria that says that the trend has continued and is therefore at this point in time more likely for a pullback. Here we have a sell on this. Now I should have had one of these squares lined up here for this area here, so we could actually take an entry on this. I didn't, so the entry that was taken was right around here on this actual red candle, interacting with the area, the support and resistance area. But realistically, that's how it goes. We were in this trade as well. We got out a bit early on the rejection of this level, and we got the follow through. This candle here did pose as an entry, but like I said, this area is way too large. Like, the stop loss would be on the completely other side of the zone at 160 pips. The risk to reward is there from the higher time frames. The daily has just been following through with the downward pressure, so that's all that you look for. That's the flow of everything. That's what you do. And lastly, I'm going to go back to this so we can just look at the history. The losses are to be kept considerably small. I wish I could put more pages on this. Let's do the closing date so we know when the trades actually close. Okay, so the first one to close on the 26th, loss of 0.05%, 20 pips, 40 pips, 38 pips, and we just have to take these into consideration. 20 pips, 33 pips, and then our winners, 45 pips, 100 pips, 50 pips. So just by this alone, some of our winners are considerably higher in risk to reward than these ones here, When we gain a position, we're getting 0.18, we're getting 0.17, we're getting 0.32, and our losses are mainly in the single digits, and we have a few in the point double digits, which is the 44 pips, the 33 pips, the 34 pips. So these are just like risk to reward things that you need to consider in your trading. Let's take a look at the second page. Here we have the same thing, 20 pips loss. This one's more so of a break even trade. Here we have a winner, 170 pips, which I'm sure clears through many of these losses. And that's one thing that we always remember. Even if we go through 4 losses in a row and we have a risk to reward of risk 1 to gain 4, we know that 4 losses equals 1 win. 1 win covers the rest, which is a very solid thought to have. And if we go to this one, we have a few more losses. So yeah, we have those losses, but those are the small losses that we account for, and we're looking for those solid trades that we can hold for the longer moves. We have small wins, big wins, break-even trades, and small loss, right? No chances for big losses at all because we're managing our risk. And like I said, so 29.10 and we're at 29.65, and we are currently down $7. So 29.10 and we're up 29.65, which is about 2%. And with our current loss of 0.24%, we're at a bit, I think we said risk 1 for 8 points, called risk 1 for 8. Other than that, we have our average win, average loss, and we just need to really add these ones in, these 10 trades that we're in now. We need to add this to the current stats, because one thing as well, on Fridays are the days that I normally go through to determine whether certain trades should be closed, whether the trend has been changing throughout the week, or should they be held because the week ahead is looking like a continuation trend week. So that's all I got to say for this video, guys. Thank you for tuning in. Prep for this week. Make sure you guys do that. You guys like, you have to prep for the week, so you know what you're looking for ahead. Make sure you go over your plans, you review, and you see how you can improve, right? What are things that you might have messed up on? Where can you optimize?